something officially locked in on March 1st that is already changing the monthly Social Security check for millions of Americans. And I am not talking about one change. I am talking about 3 separate changes hitting at the same time, one of which seniors have been waiting decades to see happen. Some people are about to see their check go up in a way they never expected. Others are going to open their bank account and wonder why their raise does not feel like a raise at all. Here is exactly what is happening and why. This update is for every Social Security recipient who wants to understand exactly why their March check looks different, why some people are about to receive a large, unexpected lump sum payment, and why for millions of seniors, the raise they were promised is quietly being eaten alive before it ever reaches their hands. 5 days ago, I received a message from a 71-year-old retired public school teacher named Lorraine from Columbus, Ohio. Lorraine taught 5th grade for 33 years. She told me she loved every single day of it. She also told me that for every single one of those 33 years, she watched a deduction come out of her paycheck that was not Social Security. Her school district had its own pension system. She paid into that. She trusted that. She built her retirement around that. When Lorraine retired, she applied for Social Security based on some private sector work she had done earlier in her life. Summers, evenings, years before she started teaching. She qualified, but her benefit was reduced significantly by something called the windfall elimination provision. She had never heard of it before she retired. Nobody had sat her down and explained it. The letter just came and told her that because she received a government pension, her Social Security would be less than she had earned. She told me she sat at her kitchen table the day that letter arrived and read it 4 times, trying to understand what she had done wrong. She had not done anything wrong. The rule was simply designed to work against people exactly like her, and it had been working against her for 6 years. Then last winter, she started hearing that the rule was being repealed. She was cautiously hopeful. She did not want to get excited. She had been disappointed before. She sent me a message this week that said, "I heard March is the month. Is it true? Is the money actually coming?" Lorraine, I have your answer, and it is the one you have been waiting for. Before we go any further, please tap the like button right below this video. It helps this update reach other seniors like Lorraine who have been waiting years to hear what I'm about to share. All right, let us get into every single change that is hitting Social Security in March 2026 and exactly what each one means for your check. Let us start with the biggest one first, the one Lorraine has been waiting 6 years to hear about. The Social Security Fairness Act was signed into law on January 5, 2025 by President Biden. It eliminated 2 of the most resented rules in the history of the Social Security program: the windfall elimination provision, known as WEP, and the government pension offset, known as GPO. These 2 rules had been reducing, or in some cases completely eliminating, Social Security benefits for over 3.2 million Americans. Teachers, firefighters, police officers, postal workers, federal employees covered under the Civil Service Retirement System. Anyone who spent a significant portion of their career in a job that did not pay into Social Security and also received the government pension from that work. Here is what WEP actually did. It changed the formula used to calculate your Social Security benefit if you also received a pension from non-Social Security covered work. The SSA argued that without the adjustment, someone with a government pension might look like a low-wage worker on paper and qualify for a disproportionately high benefit. So they reduced it. For some people, that reduction was over $500 per month, every single month, for years. Here is what GPO did. It went even further. If you were entitled to a spousal or survivor benefit based on your spouse's Social Security record, and you also received a government pension from non-covered work, GPO reduced your spousal benefit by 2/3 of your pension amount. More than 70% of people affected by GPO lost their entire spousal benefit. Not reduced, gone, completely wiped out. Widows and widowers who had planned their retirement income around the survivor benefit they believed they had earned suddenly found out it was zero. Now both of those rules are gone, and March 2026 is the month everything catches up. Here is the confirmed timeline from the Social Security Administration directly. Retroactive payments covering the period from January 2024, the month WEP and GPO no longer apply, through the present, began processing in late February 2025. The SSA has already paid over $17 billion in retroactive payments to more than 3.1 million people. The average retroactive payment has been $6,710. That is not a small amount. That is real money landing in real bank accounts for people who were shorted for over a year. But here is the part that affects people watching this right now. In February and March of 2026, there are still complex cases being worked through, cases that could not be handled automatically and required manual review. If you were affected by WEP or GPO and you have not yet received your retroactive payment or your updated monthly benefit, your case may still be in process. The SSA said all records would be updated by early 2026. If you have not seen any change and you believe you were affected, do not wait. Call SSA directly at 1-800-772-1213. Say the words Social Security Fairness Act when prompted. That routes you to a trained representative who handles these specific cases. And if you never applied for Social Security benefits at all because WEP or GPO would have reduced them to nothing or near zero, now is the time to apply. The Fairness Act did not change the rules on retroactivity for new applications. That means the sooner you apply, the sooner your benefits start date can be established. Do not wait on this. Now let's talk about the COLA. The 2.8% cost of living adjustment that took effect in January 2026 is now fully reflected in your March payment. But here is where I have to be straight with you, because Lorraine deserves honesty, and so does everyone watching this. That 2.8% sounds meaningful, and in isolation it would be. The Social Security Administration confirmed that for the average retiree receiving around $2,015 per month, 2.8% adds approximately $56 more each month. That brings the average check to about $2,071. You gain $56. Now here is what happens the moment that $56 enters the real world. The standard Medicare Part B premium jumped from $185 per month in 2025 to $202.90 per month in 2026. That is a 9.7% increase, nearly 10%, 3.5 times larger than the COLA percentage. And Medicare Part B premiums are automatically deducted from your Social Security check before the money ever reaches your bank account. You do not get a bill. You do not write a check. It is simply gone before you see it. So your $56 raise lost $17.90 the moment it arrived. Your real net increase is not $56. It is about $38 per month. And the Medicare deductible also went up this year, from $257 to $283. Another $26 out of pocket when you need care. Finance expert Michael Ryan put it plainly in a Newsweek interview this month. He said your Social Security raise shows up on the left side of the statement, and the Medicare premium hike shows up on the right side. And in 2026, the right side is winning. Now, for some seniors, it is even worse than that. And this is the part of this video that most people have never heard about, and it is costing some of you hundreds of dollars every single month without you even realizing it. It is called IRMAA, the Income-Related Monthly Adjustment Amount. IRMAA is a surcharge added on top of your standard Medicare Part B premium if your income exceeds certain thresholds. In 2026, that surcharge kicks in for individuals earning over $109,000 or married couples earning over $218,000 based on your 2024 tax return. And the surcharges are significant. Once you cross that $109,000 threshold, your Part B premium jumps from $202.90 all the way up to $284.10 per month at the first tier. At the highest income tier, your Part B premium reaches $689.90 per month, almost $700 per month just for Part B, automatically deducted from your Social Security check before you ever see a dollar. Newsweek reported this month that around 6 million seniors currently pay IRMAA surcharges, and from 2026 to 2030, those surcharges are projected to rise by 30%, according to the Medicare Trustees Report. 30% over 4 years, that is a slow squeeze that compounds every single year. But here's the part that nobody tells you, and this is important. IRMAA is not necessarily permanent. It is recalculated every year, based on your income from 2 years prior. That means if your income drops significantly since 2024, because you retired, because your spouse passed away, because you sold a business, because you lost pension income, you may qualify for a lower surcharge right now. But the government will not automatically reassess it. You have to initiate that process yourself. The form is called Form SSA-44. You can get it at ssa.gov or request it by phone. It is used to report a life-changing event that reduced your income. If you qualify for a reduction, that could mean hundreds of dollars per month back in your pocket. Finance expert Alex Bean from the University of Tennessee told Newsweek this week that the unfortunate aspect is many beneficiaries simply accept the additional charge without realizing they can appeal it. Do not be one of those people. Now, there is one more layer to all of this that surprises seniors every single year without fail. Taxes on Social Security benefits. Yes, even after paying into the system for decades, even after FICA was deducted from every paycheck you ever received, up to 85% of your Social Security benefit can still be subject to federal income tax. And now that the Social Security Fairness Act has increased monthly benefits for millions of people and added lump sum retroactive payments on top of that, your total Social Security income for 2026 is likely higher than it has ever been. That could push more of your benefit into the taxable range than you were expecting. Here is how the threshold works. The SSA uses something called combined income to determine your tax exposure. That is your adjusted gross income plus any non-taxable interest plus half of your Social Security benefits. If that combined number exceeds $25,000 for an individual or $32,000 for a married couple filing jointly, up to 50% of your benefits become taxable. Above $34,000 for individuals or $44,000 for couples, up to 85% becomes taxable. If you received a large retroactive payment this year, that number jumps for 2026. Plan for it now. You can request voluntary tax withholding directly from your Social Security payments by filing Form W-4V. That prevents a surprise tax bill next April. And here is the last thing I want every person watching this to do before March is over. Log into your My Social Security account at ssa.gov and review your earnings record year by year. The SSA calculates your benefit using your highest 35 earning years. If even 1 year is missing or reported incorrectly, your benefit is lower than it should be every single month for the rest of your life. Errors happen. Employers misreport income. Names change. Records get lost. The SSA does not automatically fix what it does not know about. That is your job. A single corrected year could mean $40 to $60 more per month. Over 20 years of retirement, that is up to $14,400 you would otherwise leave on the table. 5 minutes today. Also confirm right now that your direct deposit information on file with SSA is completely current. With retroactive payments still processing for some complex WEP and GPO cases, if your banking details are outdated, your payment will not bounce back to you the same week. It will sit in a return and reissue process while you wait and wonder. Verify your direct deposit at ssa.gov today. If you are not yet subscribed to U.S. Pension Insight, please hit that subscribe button right now. It is completely free, and this channel exists to give you straight, honest updates that protect your money. Here is where everything stands as of March 2026. The Social Security Fairness Act eliminated WEP and GPO. The SSA has paid over $17 billion in retroactive payments, averaging $6,710 per person. Complex cases are still being processed. If you have not received your adjustment, contact SSA and say Social Security Fairness Act. The 2026 COLA is 2.8%, adding about $56 per month for the average retiree. Medicare Part B jumped 9.7% to $202.90, wiping out $17.90 of that raise immediately. IRMAA surcharges are hitting 6 million seniors and can be appealed using Form SSA-44. And retroactive payments may push your taxable Social Security income higher this year. Lorraine sent me one more message. She said her retroactive payment had arrived. She did not tell me the amount. She just said it was enough. That right there is why we do this. Stay subscribed. I will see you in the next update.